If someone asks you, what is your legal entity type? And you tell them S Corp, you're probably wrong. So let me tell you why and why it matters. I can't tell you how many times I've had people come into my office and say to me one of these several things, and really it's not their fault. The internet, mainly, accountants, and even some professionals get their terminology mixed up or just don't have a clear understanding of what an S Corp actually is. Here's a really simple breakdown. Either you own a corporation or you own an LLC, but the S Corp is not your legal business entity type. It's really just a tax treatment election that you can choose to try to help save some money on taxes. There's a couple of reasons this matters. Number one, obviously, we all like to save some money on our taxes. But number two, if you start representing that you are an S Corp on contracts or legal filings, you could be stating the incorrect entity structure and not correctly characterizing your entity, which could lead to trouble or potentially personal liability down the line, depending on how bad you maybe have messed things up. So today I'm going to break this down really clearly so you can finally get a very clear and easy understanding of what is a corporation, what's an S Corp, what's an LLC, and what tax treatments are available to you that you may be able to take advantage of. So first, to clear up the biggest misconception, a lot of people come in and they say that they want to form their company and their company is an S Corp. An S Corp, like we said, is not a legal business entity type, it's a tax treatment. You file a document with the IRS to elect a certain type of tax treatment that hopefully will be advantageous for you, and that's why you're selecting it. So, for example, your LLC could be taxed as a partnership or a disregarded entity, or you could elect to tax as an S Corp. And then on the flip side, if you have a corporation, it could be taxed as a C Corp, or you can elect to have it taxed as an S Corp. And we'll talk about why you might want to do that. But if you do that, at the end of the day, your legal structure, the LLC or the corporation, remains the same. So ultimately, at the end of the day, the S Corp is just a tax election under a certain chapter of the Internal Revenue Code. It basically tells the IRS, hey, IRS, we want our business profits to pass through to the individual owners. And we meet the qualifications to have that happen. And what we're trying to do here is we're trying to avoid paying double tax. And when you do that, your legal entity structure does not change, your liability structure does not change, your Texas filings for your LLC or your corporation don't change, your contracts don't change, your governing documents don't change. Now, if you've already been operating as, let's say, a disregarded entity, a partnership, or a C Corp, the one thing that will change is your tax treatment. And whenever you have to give out a W 9, your W 9 is going to need to be updated to reflect your current new tax treatment as a subchapter S Corp. So you may be thinking, Dustin, why is all this so complicated? Why does it matter? Well, originally, back before LLCs existed, or when they were just very new and not many people used them, corporation was the main way that you would set up a business entity to limit your liability and run a business. When you set up a corporation, the problem with that is, especially for small businesses, that the corporation taxed as a C Corp, you have to pay double taxes. You pay income tax on the corporation's profits. And then when those profits get distributed to the owner pays taxes on them again. So you end up paying double tax. Small businesses need a way to pass that tax through so that they don't have to pay double tax. And that's where we came up with the S Corp. So the S Corp is a tax treatment that your corporation would file for. And that way, the corporation would not pay income tax. All of the tax would flow through to the owners, and the owners would pay income tax on it, and they would only have to pay income tax, therefore, one time. When the LLC came out, or when the LLC became a much more popular business entity to use, people started getting a lot more confused by this because the tax treatment is called S Corp. It's not called an SLLC or something like that. So people are very confused. They think that maybe they can't use the S Corp tax treatment with their LLC and that they have to convert into a corporation to use it. Or maybe that they can't ever get this S Corp tax treatment. So the really nice thing is the S Corp tax treatment is available to LLCs and you don't have to convert into a corporation. So now that we've got that little bit of history lesson worked out, we'll talk a little bit about the two types of entities that most people use, the corporation and the LLC. The corporation, obviously, it's owned by shareholders. It's run at the highest level by a board of directors, and then the directors elect officers to run the day-to-day affairs of the company. Its standard tax treatment is that of the C Corp. So the taxes are the double taxation setup, but the corporation can elect to use the S Corp tax treatment to have those profits flow through to the owners and only pay tax once. On the flip side, you've got the LLC. The LLC is by far the most popular business entity type in Texas these days, and there's a lot of reasons for that. It's got superior liability protection. It's got more flexibility in operations and management, more flexibility in how you set up voting and profit and loss. Just a really good business entity type to use. And a lot of people think that they cannot use the S Corp tax treatment with the LLC, but that's actually incorrect. So your LLC's default tax treatment is going to be disregarded if you are a single owner, or if you can elect to be disregarded, or a partnership if you're married, if the owners are married. And then if the owners are unmarried and there's more than one owner, then the default tax treatment for your LLC is a partnership. And that's actually another tax treatment that flows directly through. You don't have to pay double taxes on it, but it's a little bit different, and you can actually save some money at some point by converting to an S Corp. So we've established essentially you've got your corporation, your LLC, and the S Corp is just the tax election. It's not a business type, not a legal entity, it's not a liability shield, it's not a formation. It's really just the tax election. And we'll talk about now why that matters. So, obviously, if you've got a C Corp right now and you elect to switch to the S Corp, it matters because you could potentially be saving a lot of money on the double taxation as a C Corp. If your LLC tax treatment is disregarded or a partnership, and those profits are already flowing through to the owners, well, why does it really matter? Why would you want to elect to become an S Corp? And the reason for that is that as an S Corp, instead of paying out the owners in draws or guaranteed payments, now you're paying out the owners partially in distributions and partially in what we call a reasonable salary. And that reasonable salary is a business expense. So there is a threshold that your accountant, your CPA will be able to guide you on as to when you should elect to convert the partnership or disregarded tax treatment into the subchapter S tax treatment. And the reason for that is that once you hit a certain threshold, the amount of money that you're making and amount of money that you're paying out to the owners, you potentially could get a beneficial tax treatment by reclassifying to the S Corp and changing some of those guaranteed payments or distributions into essentially payroll. Now, to keep in mind, you may not want to do this when you first start out unless you're already making a good bit of money when you first start. The reason for that is if you have to pay yourself a reasonable salary and all of the reasonable salary comes in as payroll, then you're paying income tax and payroll tax on both sides of the equation as the business and as the employee. Now, if you're not making very much money, you're actually going to pay more tax that way than if you left it in your LLC as a partnership or as a disregarded entity. So it's really, really important here to get with your CPA and figure out what is that threshold where I'm going to be saving money on my taxes if I swap over to an S Corp and I start expensing some of this, some of the payroll tax and payroll expenses. And your CPA will be able to give you guidance about when to do that. Now, if you start up a business and you're immediately making a pretty good chunk of money, then maybe the S Corp makes sense for you to do straight out of the gate. So if you start a corporation, it's almost certainly going to be beneficial for you to not pay the double tax. And you may elect to do that S Corp filing straight out of the gate based on the advice of your CPA. But with the LLC, you may wait a while until you hit a certain profit threshold before you switch over to become a subchapter S. Now, there are certain requirements you have to meet to file for the subchapter S tax treat. For example, only U.S. citizens or residents can be owners of the S Corp tax treatment entity. Corporations, partnerships cannot be owners of the S Corp. So if you've got a business structure where your business is owned by another business, that may exclude you from this tax treatment. If you've done some advanced estate planning and you've got a trust, you may not be able to elect this if you have a trust as the owner of the company. So that's another thing to keep in mind. The next thing you need to keep in mind is in the S Corp, all of the owners have to be receiving profit distributions proportionally. So let's say you've got two owners, one of those 75%, the other one's 25%. They have to be receiving those 75% and 25% profit distributions. Most of the time, this doesn't really matter, but if we're really digging down into the nitty gritty, in LLCs, you can actually have different splits of voting distribution versus profit distribution. And if you have that, that may exclude you from being able to elect this subchapter S tax treatment status. So you've elected your subchapter S status. What changes? What doesn't change? Well, first of all, what doesn't change? Your liability protection, your entity structure that you've set up, your Texas Secretary of State filings, your operating agreement or your bylaws, your corporate formalities, ownership structure, all that stuff remains the same. Your registered agent remains the same. Really, the only thing that's changing is your tax treatment. And after your tax treatment changes, you must pay yourself that reasonable salary. So that's something that you always want to stay on top of with your CPA. What's the amount of the reasonable salary that I need to be paying myself in order to meet that reasonable salary requirement? Because of that reasonable salary requirement and because of the pro rata distribution requirement, there's a little bit, you could say, more IRS scrutiny involved. And so your record keeping expectations are going to rise. You're going to need to be able to keep very clear, clean records, keep your books well if you're going to elect this subchapter S tax status. Obviously, we want you to keep good books all the time, no matter what your tax status is. But just being aware that once you elect this, you're going to need to be able to prove to the IRS if they come knocking on your door that you're paying yourself a reasonable salary and that the distributions are being paid in the proper percentages. Obviously, your payroll expectations are going to change. You may elect to send all your payroll through a payroll provider so that way they properly deduct all the payroll taxes and make sure that those are paid in timely and that all your payroll forms are paid timely. I don't advise that you do them on your own. They're not that complicated, but these payroll companies are fairly inexpensive and most of them do a really nice job of getting those filings done on time without any additional input from you. So if you're going to do the subchapter S tax treatment, I certainly recommend for you to get one of these payroll companies to help you out with making sure that you're compliant with your tax payments and your tax filings. Some common mistakes that I see once someone has elected for this subchapter S tax treatment is they start listing their entity type as a S Corp, which is not true. So you need to make sure that you always are still signing with your correct, proper legal entity name and type of your corporation or your LLC. Some people also even actually fall into the trap of using mismatched company documents. So I've seen LLCs using corporate bylaws and using a corporate shareholder agreement when an LLC doesn't have those things. An LLC has an operating agreement. And so you don't want to get your internal corporate documents or company documents mixed up and use the wrong type just because you filed this. So again, LLC uses LLC documents, corporation uses corporation documents, and the subchapter S tax treatment is really just the tax treatment. It doesn't modify your internal structure. So as you can tell, I have referred to CPA or a tax advisor many times in this video, and it is incredibly important when you start a business to form a team of professionals to help you out, to give you great advice. We want professionals that are experts in their areas or specialists in their areas, someone that is very experienced in the thing that they're doing. Obviously, you would like to have a business lawyer, but you also want to have a CPA. Your business lawyer is really not going to give you tax advice, and your CPA should not be giving you legal advice. Your business lawyer shouldn't be filing your taxes. Your CPA shouldn't be forming your LLC. It's really critical and extremely important that you form the professional team with your business lawyer, your CPA, and potentially other people like an insurance agent, a banker, and so on and so forth to be able to put together the team that you need to properly set things up for you and protect you going forward. When are you going to elect for this subchapter S tax status? That's a question for your CPA. You certainly want to get in touch with your professional team to figure that out. Understanding how your S corporation election actually works is really a very, very important part of forming a business or owning a business and setting it up correctly with respect to the tax treatment. I hope this video has finally helped you figure out exactly what the S Corp is and what it is not, and when would be a good time to elect versus not elect that S Corp tax treatment. I really appreciate you watching, and if you'd like to learn more about me or what we do at our law firm, you can click the link in the description to visit our website. Thanks for watching. I'll see you in the next video.